Professor MoneyPigTrading, a former AI researcher, non-data science and trader. Today, July 10, 2021, we're going to talk about trade option episode 2, how to use long option as a strategy and why is it an easy way to hedge your cryptocurrency or stock portfolio. Here we use Snowflake plus 328% momentum option trading as an example. So if you haven't liked this video, make sure to like it. That will help our YouTube channel tremendously. Any question, feel free to reach out at www.moneypigtrading.com or Twitter, YouTube, Instagram, or MoneyPigTrading. So in this tutorial, we're going to mention a few option trading strategies, and then we're going to talk about some details that you should know in terms of option trading. We also make this catalog for tutorials on our website, moneypigtrading.com/tutorials. Here you can also look at all this YouTube video link and the different episodes, or simply just subscribe this YouTube channel on the upper right corner to get the latest option trading tutorial contents. Or just continue to play it as a podcast. And since we're using Snowflake as a short example, we just want to have a disclaimer. Currently, we are loaning Snowflake stock. We also have a long Snowflake call option while we're making this YouTube video because we believe Snowflake is a really powerful data warehouse. And on Friday, July 9, 2021, our AI model will detect that Snowflake is going to go up. Our next week target price is 280. 3 to 4 weeks, possibly because 308, and that's where we're loaning Snowflake stock. And on the day trading July 9th, our long call option make about 200 to 300% of the trades. Swing trading actually make us over 100% of the gain. And this particular account just by Snowflake on Friday, July 9th, we actually made over $2,000. So that's a really quick disclaimer. So what are options? Back to the topic. So basically, options are the underlying give you the right to buy or sell an underlying asset at a predetermined price before the option expiration date. So in this particular example is a long put options, which means an option contract that bets on the underlying stocks will go down. Here's the Snowflake as example. In the previous video, we talked about long call options, which is a totally opposite strategy, betting on the underlying asset will go up. Any question, feel free to check that video, and the link's on the upper right corner. So here is Snowflake. We actually also make a video about Snowflake lockup period expiration. We explain how to trade it and why it will work out. Usually 3 weeks before lockup period expiration, the stock price will start to tank because upon the expiration date, the newly IPO stock, their insider can start to sell all their their stocks, and that's why usually 3 weeks ahead of a lockup period expiration, the stock price will continue to drop. And for this particular Snowflake video, the link is on the upper right. Feel free to check it out. In this particular example, we're looking at the left side Snowflake daily chart. It was traded December 2020 all the way to $400. And in that video, we actually warn people don't buy it right now because the lockup period expiration is coming. And as we said, there's a major lockup period expiration January 2021 and March 2021. Snowflake dropped from all the way $400 to $230. That's a very significant 60% drop. So zoom in. This is our trade example. We just zoom into the hourly chart. Between February 19 to February 23rd, Snowflake actually dropped all the way from 290, 278 to 248. When we capture this trade between Snowflake 278 to $245. So if we're looking at a put option, we're looking at the ticker, expiration, strike price, and type. So here the ticker is Snowflake stock, SONOW. And the expiration is February 26, 2021 with the strike price $260 and the type is put option, betting on the underlying asset will go down. Here, if the Snowflake stock price is traded below 260 at the expiration date, we're saying this put option in the money. On the other hand, if Snowflake is traded above $260 per share at the option expiration date, we're saying this option contract is out of money. And using this as an example, so if you short Snowflake on February 22nd, 2021 at $278 and you exit the next day at Snowflake 243, you're going to make 12.6% of shorting this stock. On the other hand, if you loan this put option, enter at $3.5 per contract with Snowflake was traded at $278 per share, and you exit the next day when the Snowflake dropped to 243, this particular put option contract will become $15. Then that means you're going to make 328% of the profit, which is way bigger than the short stocks directly. We actually send out this alert on Discord community, also on Twitter. If you're interested in our Discord service, make sure to check it out at www.moneypigtrading.com. So looking at the put option price paradigm, the y-axis is the option contract price, the x-axis is the Snowflake stock price. And you can look at the orange line first, is the option price at expiration. So this particular 260 put, if Snowflake at the expiration is traded at 270 put, your option is going to be worthless, $0 per contract. Why? Because the long put option gives you the right to sell Snowflake at 260. At the expiration day, Snowflake trading at 270. Who wants to sell Snowflake at 260 in that case, right? So your option will be worthless. However, if Snowflake is traded at 250 at the expiration date, that means you have the right to sell 260 by owning this put option. While Snowflake at 250 traded at 250, 260 minus 250, that's $10 difference. That's the value your put option will have. So that's why when you loan a put option, having it to be in the money is so important, especially at the expiration date. So here we're looking at the blue line is the option price before the expiration date. So we enter when the Snowflake was at $278 per share, when the option price was at 3.5. It's an out of money contract, but the market is expecting maybe Snowflake will drop further. So even though it's still 5 days before the expiration, because of that, the option actually has some intrinsic value. And because Snowflake dropped so quickly from $278 to $245, your option quickly become in the money at $260, and the price continued to go up to $15 per contract. And that's why this long put option can go, the option price can go up so quickly while the underlying asset drops so quickly. So here is just a really quick hourly chart. We enter Snowflake stock, 278, and exit the option 248. On the right side is the option hourly chart. You can see at 3.5 per contract is our enter price, and the next day we exit at $15 per contract, which is 350% return. So basically, the long put option is a high risk, high reward method to capture a downtrend. It's a perfect way to hedge your portfolio. The other thing to highlight is, so basically the put option, your maximum risk when your long put option is 100% of your trade. But on the other hand, you pretty much don't have a cap unless that underlying asset drops to $0. So basically, your reward can continue to go up until the underlying asset becomes $0 per share or per coin. And then your maximum stop loss is 100%. And why loan put option is such a good way to hedge? So take this as an example. When you loan Snowflake stock with $10,000, between February 22nd to 23rd, Snowflake drops 16%. You're going to lose $1,600, right? Very quickly. However, just by having one Snowflake option contract, this strike price, and you enter at $3.5 per contract, and don't forget each option contract will give you a right to buy or sell 100 shares in the United States. So multiply by 100, that means you spend $350 for this put option. And on February 23rd, you sell that put option at $15 per contract. That means you're going to get $1,150 per contract. And that pretty much offset your bigger portfolio loss. And that's why just by having a very small amount of put option can give you really good protection on your underlying asset or cryptocurrency. And if you have any question about how to trade options in thinkorswim, feel free to check this tutorial, and the link will be on the upper right. We'll go through all the details step by step. Just want to highlight we actually have a swing trading program on our Discord community, mostly option. So the average return per trade is always above 0%. That means always make money with a decent winning rate, always above 50%. We have a benchmarking account starting in early March this year, 2021, was at around 1,500. As of July 9th, this small account actually traded almost at $20,000. That's in 2 months of 1,250% of the return using options. So if you're interested in our Discord community, feel free to check us out at www.moneypigtrading.com, Twitter, YouTube, Instagram, or MoneyPigTrading. Make sure to follow. Thank you for watching. I'll see you in the next YouTube video.